Good morning. Welcome to CurrencyChange Daily Markets Update on Friday, the 8th of November 2013. My name is Laurent Guilbault, Managing Director at CurrencyChange.com, your low-cost solution to send your money abroad. The key event of the day will be today's US job report called the non-farm payroll, which is the number of jobs created by the US economy. This release is widely expected to be heavily distorted by the impact of the recent government shutdown we've seen there. The US employment numbers are uncertain at the best of times, but the October data have the government shutdown, which will significantly increase the uncertainty there in the release of the data. There can nevertheless be significant indirect effect from the government shutdown on private contractors and other workers whose employment depends on government. So there is certainly a risk of a downside bias in the payroll data, especially in the name of currency war there is at the moment, and the household data, there is a direct effect as the government workers will be counted as unemployed in the household survey. This makes the market expectation of a 7.3 unemployment rate look particularly optimistic. Even so, the fact that weak data can be seen as distorted by the shutdown and strong data can be treated as more genuine suggests a potential dollar upside, which means sterling dollar up and euro dollar up, because that's what the US wants. They want a strong euro. In Europe, the surprise decision by the ECB to cut interest rate yesterday by Super Mario Draghi means there is now about an even chance that the euro, this year's performing major currency, erases all of its gains in a matter of months. There is an almost 50% probability the euro, which has risen against the greenbacks since reaching a 2013 low in April, will give back its increase by mid-2014. A key news this morning, S&P downgraded France rating to AA from AA+, with a stable outlook, saying the government reform of tax, without any surprise, labor markets, products and services won't raise at all medium-term growth prospect at the moment with this government. That's a new reason for euro bearishness in the currency war. Yesterday's surprise, ECB rate cut had a big impact on euro dollar, sterling dollar, all the key currencies, and while the somewhat lower level of European yields makes sense given the persistent weakness of the eurozone economy, it is hard to generate expectation of persistent euro weakness based on further declines in European yields. The euro dollar recovery to 134.50 overnight may consequently be as far as the euro gets without a much weaker than expected US employment report, and the Americans would be happy with that. In UK, the pound was set for its biggest weekly gain versus the euro since April, after S&P lowered France sovereign credit rating by one level. The Bank of England yesterday kept its key interest rate at a record low and maintained its bond buying stimulus target, so a non-event as we had expected yesterday morning. Despite the plunge in the euro yesterday, initially having a negative impact on sterling dollar, there was little net change at all at the end of the day on sterling dollar. Trade and construction data today are unlikely to significantly influence the UK picture. So sterling dollar today will only depend on the US non-farm payroll statistics. Sterling euro is currently at 120. It's seen as a significant level and may hold it short term, but we could expect that this move goes even upwards to the 122 level. In terms of live exchange rates on sterling dollar, we're at 160.94, sterling euro 119.93, sterling Canadian dollar 168.22, sterling Australian dollar 170, sterling New Zealand dollar 193.12. Economic agenda for today, UK time, 9:30. UK goods trade balance expected at 9.2 billion. At 1:30 is the key event of the day. The US dollar non-farm payrolls expected at 125k versus 148 last month. Unemployment rate expected at 7.3%. Also the PCE, a good indication for inflation, 0.2%. At 3 o'clock, the US dollar consumer Michigan expected consumer sentiment at 74.5. And at 8:30 tonight, we will have a Bernanke speech not to forget. If you have any further question or information needs, you can visit CurrencyChange.com, where you can open an account for free with us with no obligation to trade. And you can also call us on +44 0207 373 2686. I wish you a great weekend.